Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, April 11th, 2018. I wanted to do sort of an eclectic mix of different charts, unrelated charts, just things that I'm watching today, things that stand out or may present some trading opportunities soon. I won't spend a lot of time on the broad markets. I did an in-depth video on that last night. This remains a level right here, at least to me, the big level, 161.70-ish, we'll call it. I have it 161.66 here. Same level on the 15-minute chart. You can see we've just been dancing on that level. So it's hard to argue that's a very significant level. Now, where we go from there, that is yet to be seen. And here I just pause the video for a second to pull up my toolbar to draw a trend line. So really what we're looking at here also is, a descending, or I'm sorry, an ascending triangle pattern. You can Google that term. They're inherently bullish, but they can break either way, and you have to respect. So pretty much you have a trend line here off the lows right here from just a week or so ago, and you have the that 161.66 level, and that resistance goes back all the way to this reaction here. And we're going to pop one way or the other. I made mention in the trading room we have the FOMC minutes today coming out at 2 o'clock. That's not, they had their meeting a couple weeks back, and then they released the minutes of the meeting, what they discussed and all that. Sometimes those can be market moving events, and it's most likely to pop this market out of this very near term consolidation. What I mean by that is, just last couple of days we're pressed up. We've been pushing against that level and sort of, firming up this uptrend line where before we were, the market was marked by these sharp moves. So it's consolidating, and typically consolidation periods, whether it's a falling wedge, a rising wedge, a triangle pattern, uh, they act as coiled springs. This is the market building energy. So my expectations it remains for a pop to the upside, but you have to respect a downside break. And again, you have some support levels listed below. And, if there's anything earth-shattering, which I doubt, that comes out of the FOMC meeting minutes today, you could get a whipsaw in either direction, so you may not want to react to the initial move. You could break out here, you could back test and then move on, or you could have a false breakdown. Anything can happen. We'll take it as it comes. Let's not spend too much more time on that. Let's look at the futures real quick. NQE mini futures, basically the same chart. Only difference is a futures trade, virtually around the clock, other than for the weekends. They shut down on Friday, and then will reopen Sunday night. And they have a brief 15-minute period where they shut down every day to kind of square away, let the exchanges square everything away. So you can see the big story remains what I covered last night. You had a downtrend line, a breakout, successful back test, but we're also wedging up within that ascending triangle pattern. And there it is, guys. That's the next major trend, or at least tradable trend. 3% plus is most likely to come on whichever direction this breaks. But you have to respect there are some support levels below, just as there's resistance levels and target zones that I have above here. So that's what's in store for the broad market, and I've made my views clear, for last several days now that I've still maintained that bullish bias. It seems to me this market it has a floor beneath it right now from the excessive bearishness, put call ratios, and things like that. So, ideally, or at least my expectation is to see some more upside in the coming days to weeks here, and then probably another leg, excuse me, another leg down from there. Okay, and for those of you getting sick and tired of the stock market or have no desire to trade it, I know there were, a couple comments lately in the trading room, and I get it. This kind of volatility is not for everyone. Day traders love it, very active, nimble traders, but swing traders, it'll grind you to pieces. So let's move on to some other things that really don't have anything to do with the stock market, or very little, and that would be gold and oil, the dollar-sensitive commodities. So if you followed my analysis recently, I told you I was highlighting this wedge, and even going back for weeks, I've had this scenario. I'd like to see it, and hopefully we'll get it. And that is a push up. We had this false breakdown, and at the time it happened, I made mention I wasn't buying into it. Normally, I'd say, okay, there's a breakdown, sell signal in the euro US dollar. And by the way, just to be clear, when this chart, I always say this is a chart of the euro compared against the dollar. So when this is going up, the euro is rising against the dollar. So when the trend is bullish on this chart, it means the trend is bearish on the dollar. So as I said the other day, I was skeptical of that breakdown. We did recover the trend line, so that's bullish right there, and quite bullish because we had a failed breakdown. I mentioned, not only that the breakdown was lackluster, not impulsive at all, but we also had some pretty decent support below. So we held really on that first support level. This is bullish. Now this is why there's a big pop in GDX today. This is why gold is up, silver is up, because the dollar is down. Again, this chart's moving up. Euro is rising against the dollar. Still has some work to do. You can see I have a resistance level here, but clear all those lines out. And I remain, as I've stated recently, near-term bullish on the euro, so near-term bearish on the dollar. Uh, would like to and leaning towards this level get taken out. And then anytime we exceed this previous reaction high here, I just drew a line that could come into play. We could possibly go all the way to the top of the wedge before reversing. But as you can see here with these purple lines that I've drawn, that gives us a little upside on the PPO as well as the RSI, as long as we take out this previous high. These lines can and probably will be adjusted, but then we'll have a divergent high within the bigger picture of these yellow lines. This is a large bearish rising wedge pattern. So, the most important level here is this primary uptrend line, pretty well defined. We need to see it go with conviction. So there it is. So near term, there may be more upside in gold, GDX. I'm going to get to those charts in a second. I told you the other day, platinum looked, of all the three, well, there's palladium too, but the three main precious metals, gold, silver, and platinum. Platinum was my pick. It looked pretty bullish the other day, breaking out. So we'll get to that chart in a second. Let's just go ahead and roll into those charts. So here's gold. We'll just use the ETFs. Now gold's still within the trading range. Big pop today, one of the biggest pops in a while, but the purple box right here shows you the recent sideways grind that gold has been in. And so we're pretty much right up to where we were here when we made this divergent high and the correction started, and then we went into this trading range. So gold hasn't yet broken out. A little concerning if it does break out soon. You can see I'm drawing some lines down here on the momentum indicators, the PPO and the RSI. Any new breakout soon will be a divergent high. So, I'm lukewarm right now on the precious metals and the miners. I'm still standing aside this trade. I've made that clear recently. There was a trade to be made today in GDX, obviously, but there it is on gold. So it's in the trading range. It will probably break out of this level because the dollar looks to at least have some near-term upside. I'm sorry, downside. The euro has some near-term upside. Dollar looks like it has some near-term downside. So maybe a breakout here. Could turn into more than that. Could burn through these divergences. But right now, my convictions just aren't strong enough to make a trade there. If I had to be long or short, I would be long. I'll make that clear right now. And, you guys can trade it as you want. These are the levels on SLV, the silver ETF, still within its trading range. And if it breaks out, you can see a pretty well-defined level around 1637, 1640. It gets traded through somewhat because silver's an ETF, a lot like the futures contracts, gold and silver, they trade around the clock around the world, different currencies or futures trade. So you're going to see a lot of gaps here, just like you do on the equity index futures lately, or ETFs, that is. Any ETF or ETN that tracks a futures contract that trades around the clock will have those gaps because you're only seeing the 9:30 a.m. to 4 p.m. trades here. So with that being said, that's why the resistance levels are not super well defined. But this is a level I've had on this chart. Man, I can go all the way back here, and I just see a lot of reactions around that level. So that would be my next target. If you're looking for an upside target there, after that would be this line here, that previous reaction high. There's also a gap right there to be backfilled. And after that, you'd be targeting the next reaction high there. So right now, let's just say I'm leaning towards maybe this 1660-ish level, wherever that line comes in right there. And then there is PPLT, which is one of a couple platinum ETFs. This is the preferred one I usually trade if I'm going to use an ETF instead of futures. I pointed this out the other day on the 60-minute chart. This is what stood out to me. You had this divergent low. You can see the bullish divergence, the PPO and RSI making higher highs while prices made lower lows. And then you had this pretty clean descending price channel here with these two yellow lines. So we gapped up above that, got pretty stretched, had a little pullback, and we're moving up, and we're close to my first target now. So you can see the potential targets: 90 first target, 91.20, and then 92.70. Those are actual resistance levels unadjusted for an optimal fill. What that means is if I was planning to book full or partial profits at T1, my sell limit order would be at $89.92, 94 cents. All depends on the chart. I'd really zeroed in, but I don't try to eke out every last penny. By doing so, you risk the security you're trading reversing just shy of resistance if the sellers happen to step in early. So that's why I adjust the all the official trade ideas. I've already made adjustments to the targets. And here's GDX, gold mining ETF. We had some resistance here, a resistance zone. We had couple little attempts to get over it, but I'm referring to these two lines here. You can see a lot of reactions occurred at that level there, and boom, pop took it out today with conviction, but we ran smack up into my next target zone, first and next target zone, and that's defined by a lot of reactions here to the left of the chart. By the way, this is a hourly or 60-minute chart we're looking at here. So I just posted in the trading room right when we were here, right on it, 20 minutes ago or so, that we were at resistance. So the odds for a reaction are likely. Wouldn't chase it here, and that's so far we've had a reaction. A reaction can either be a consolidation, a pause or a consolidation, or it can be a pullback. And ultimately we may go on to take that level out, but as of now, it wouldn't be objective to add here because, like I said, gold. I just showed you gold and silver at the top of their trading ranges. Have yet to take those out, so they're at resistance while GDX is at resistance. So, TA 101, if you're looking to get long gold or GDX or add to it a position you already have, you either wait for a pullback to support. I wouldn't go all the way down to this resistance zone, maybe just step in slightly above this reaction high here, or you wait for maybe a little consolidation and then a boom, a pop above that level for the next target. So there's GDX. Let's move on. Well, look at the daily chart. I don't know if anything, yeah, it does stand out. There's a level, and I've covered this in recent videos, in the recent gold and precious metal mining stock videos. That 2315 level was a target that I've been watching, pretty significant resistance level. So if that can get taken out, that's pretty bullish, and we may run all the way up here to about the 25-ish area or so. We had a divergent low recently on the RSI on the daily time frame. So there's GDX. And now let's move on to oil, which is also a dollar sensitive asset or commodity. Oil, this is a chart of an ETF or ETN that tracks oil. This is one of the more popular ones, USO, non-leveraged. You can see here I have clear negative divergence. We had a small divergent high back here, right here at this point. You can see divergence drawn at this point, and that led to a sharp correction. But the most salient level on this chart right here to me is this uptrend line. We're right now well above it, but we're putting in a divergent high. We just took out the previous highs, but it's a divergent high, and I think we'll come back down and not only test this level one more time, but I think ultimately go on to break down. And let's take a look. You can look at also OIL. That's another non-leverage ETF. It'll almost mirror USO. I think this is a pure play on WTI, where USO has heating oil and some other UTI derivatives, refined products in there, but they're going to trade almost identical. So there it is, same chart, negative divergence, et cetera, et cetera, et cetera. Let's go back to the USO 60 minutes, see if I had anything there for you. I do. What stands out to me is oil, if it can reverse very soon, this momentum, the PPO, so that can change. It looks like we're right now challenging those highs, and that can turn back down and put in a bearish crossover. So there's the potential, if USO reverses soon, to have a divergent high on the 60-minute chart as well as that daily time frame. So, what would trigger a sell signal on the crude? Because I've had a few people ask, because I recently showed a potential setup on DWT, which is the inverse bearish crude ETN. And I shared it only as a setup, not yet ready to pull the trigger, entries to be announced, and that's because let me get to it here and show you on CL. This is my CL crude futures chart, May contracts. This is why I've held off. You can see CL put in a divergent low. We had one divergent low there, right there, positive divergence at that point. boom, led to a rally, and then we put in a second consecutive divergent low. So this is what we call double positive divergence or consecutive divergences, whatever you want to call it. It's bullish, and you can see the downtrend line there. We broke out and then ripped, and we ripped up. There's a pretty well-defined uptrend line, and you can see now on these futures as well. This is a 60-minute chart. You can see potential but not confirmed divergence. In my book, it is confirmed when the PPO down here makes a bearish crossover and puts in a lower low. Right now, the PPO is still pointed higher. So that means there's a potential if crude oil continues to rally, then we keep going and we burn through or negate these potential divergences. So that's what I'm on lookout for. Let's look for maybe a big red reversal stick or two or three a pattern of reversal candles either on this 60-minute or the daily time frame. And then the next signal, that would be an early potential sell signal. The next sell signal would come on a break below this trend line, and then that brings us up to WDT. Okay, here's WDT, and I left my trend line as was drawn earlier to show you, the difference between confirmed and potential. Actually, you know what? I'll take that. I take that back. It was confirmed because we had looks like a crossover there, but yet it's failed. And again, the 60-minute chart didn't confirm. And I also want to say this. I put a much heavier weighting on when I'm trading specific commodities on the actual futures contracts versus these ETNs. These ETNs, some more than others, suffer from all types of decay, slippage. They're trying to track and trade futures contracts, and over time, when you look at longer-term charts, they don't do a perfect job of tracking. I cover them and I use them as trade ideas because I know a lot of traders that especially those new to investing and trading, do not have access, or the capital requirements for a futures account. So we'll use these, and they are good vehicles. If we get that, a pullback, especially a tradable trend on the downside in crude, the upside potential is pretty nice on this. So here we go. We still have potential divergences, but you can see the PPO is pointing down right now, so it needs to turn back up. So like I said, I'm on watch here, and if I see evidence, I don't want to try to catch this falling knife on DWT, which is like catching a rising knife on crude, something going up on crude oil. But there it is. There's the potential. And even if we go a little lower, just like I had that line drawn here before, we can go a little lower and still keep these divergences intact. Same with USO, at least on the daily time frame, not so much on the 60. And as long as those 60-minute divergences and everything else stay okay on the crude futures, then we might have a setup here very soon. But again, this is a case of the second mouse gets the cheese. First mouse might have gone in here and got caught in the trap. So we'll just wait. I'd rather not try to nail the exact bottom on this one versus get in early, especially on a leveraged ETN. This is 3-time leveraged, 300% inverse. So it's going to go up or down, 3 times what crude does in a day, all other things being equal. So there it is. There's a scenario. So if we can get a reversal soon, that will set it up. Maybe we'll put a starter position down here on some signs of reversal, particularly on those 60-minute charts, and then look for a breakout above this trend line. And here's your targets that I've covered before, just to try to quantify it for you. The potential even to this first target from where we're at now is 30%. That's in the pop-up box on the left. 49% if that second target is hit, and 67% if that third target is hit, which looking at this chart, it looks pretty good. We just have to be patient on this one. If crude really collapsed, I don't see that happening now. There's a big, well-defined resistance level way up here, but let's not get ahead of ourselves. Let's keep it simple. As of now, this is the bounce target zone that I'm looking at on DWT. Okay, one of the other things I've been watching lately and covering is Bitcoin. I've until just recently, I've never traded Bitcoin, never cared to, stayed away from it. You're not going to find a lot of previous posts on the site other than, when the bubble was going on, me stating it was a bubble, it would pop, and like all bubbles, you don't know when that top would come. But at this point, prices have normalized. I think there's just a trading up, and stay away from it. It's still a relatively new well, SEC is trying to categorize it. Well, this is a security now because these are futures. They trade on, they have futures both on the CME and CBOT. But other than that, before that, they didn't know what to categorize it as a currency, as a a security, an asset. Either way, there's a trading op to be made, I think, here. You can see the breakout here. We had a bullish falling wedge pattern. We broke out. The breakout failed. We fell back below the wedge, but now it's started to move back up. And it seems to be pounding out a bottom, and there's really strong divergences. So the trades on this, if you don't trade futures, if you do, I was already shared, these are my targets here. Right now, that'd be my final target. But these first two targets, let's see what happens. Let's see if this can start to build some traction. And then the other proxies for trading Bitcoin are GBTC, Bitcoin Investment Trust. This is like an ETF, but it's closed-end fund. It trades at either a discount or a premium to Bitcoin price. I drew a scenario here. If it does make another thrust down, it will be a divergent low. We almost had a divergent low there, but we do have divergence on Bitcoin futures. Remember, this sucker trades at either a premium or a discount, so therefore it's not always, the prices are not accurate. There's a disconnect between the prices of this tracking vehicle and Bitcoin itself because of the fact that it does trade at a premium or a discount. But you can see a pretty well defined downtrend line. So, and it moves, when it moves pretty good. So there's the targets. I've already shared that on the site. Additional evidence will come if we see the Bitcoin futures moving up and then this line taken out. And then two of the proxies, if you want to get probably even more bang for your buck, and that cuts both ways, but we've traded these in the past. Overstock was a short twice. We had two profitable, very profitable, well into the double-digit percentage gainer short trades on Overstock when I saw the Bitcoin bubble popping. That's what I used as the proxy to short it, and I had this level on my chart here for a while. In 30.94, we kissed that level, and so far we've reversed. So it looks like those in the know. If you're wondering, if you're not familiar, Overstock, the last I read a few months ago, the owner of the company, they wanted to completely jettison their online retail business. They've never been able to compete. They've always been a far distant second to Amazon, and so they've gotten into the what is it, the cryptocurrency whole arena. So therefore, this is a proxy, if you will, or a way to indirectly trade Bitcoin and other cyber currencies as well. And so we could probably draw a downtrend line there. It's not super well defined, but I'll give it a shot. Yeah, so we've taken that out. Bullish PPO crossover, low level. That's another plus, besides the fact, of course, that it reversed off support and did so impulsively. Oversold, deeply oversold. The last time it was this deeply oversold was back here in 2017, and that proved to be the bottom before a rally of, get ready for this, I use log scaling. It might not look like much, but that was 557% off that low back there. So doesn't mean you're going to see 557% again. I don't think so. I wouldn't expect it. I've been nibbling on this one, small positions, and I'm targeting this 48.18 level right now with stop, my sell limit order set just below that. That's what I think, that's all I care to milk out of this run. And then the other one, again, which I've covered on the site in the past, is Riot, RIOT, Riot blockchain. Riot has this level here, $6.37. That's off this reaction low right there. We had this flagging type action, huge move. This one rallied strong. It was part of the hype, the whole hype, up 1,200%, and then it fell almost 87%. So, if you chased it here, even if you took it in this flag, you now lost everything and then some. But that's a level. It was that reaction low, which was a significant reaction low back there. And, it was a level I laid out in advance, I think before we even fell back here. I'm not sure when I put that line there, but it doesn't matter because you can see now it has contained all the pullbacks since April or March 28th. So we've been trading along there now for the last 2 weeks. And again, it hinges largely on what Bitcoin does. But if Bitcoin takes off, or some of these other blockchain, cryptocurrencies as well, I don't know exactly what, Riot blockchain, I think they're in the the business of doing those ICOs and all that, and trying to create an exchange. But you can see a pretty well defined downtrend line there, and PPO is flattened out because there's been such large price swings. A MACD would look even more flat than a PPO. So other than that, that's it. I can just show you a downtrend line. If we pop and Bitcoin and some of these other cyber currencies begin to rally, this one looks good up to 960. What is that from where we're at today? That would be a rally of 41%. So risk reward go hand in hand. That's the only certainty I can give you in the markets is that risk and reward go hand in hand. You take this one, you have maybe 42% upside, or it can turn around and drop. And if you're trading it, this sucker swings, easily mid single digits, sometimes double digits in a day. So you can't really trade a stock like this with a 1%, 2% stop loss, or you're gonna get clipped and run at that stop just in the daily gyration. So what you do is you nibble at it. You take a small amount. If you have speculative money, aggressive funds, take a small position, because you can take a quarter size of your normal position. If you make 42% on the trade, that's like making 10% plus on a normal trade, which is good for most swing traders. A couple more trade ideas and we'll wrap it up. Kara, one of my old favorites, was talking about this one back here. Really liked the fundamental story. This is when I was hot on the pot stocks. In this one, it's a biotech company, but they have some cannabinoid-based, drugs in their pipeline, and so they're a little bit more legit, a little bit more established than a lot of the other smaller pot stocks or cannabis companies. But it had a great run. We traded this one mostly long, but some long and shorts. Now the point is, I've been watching it for a long time, waiting patiently out of it. Um, but looking at this level that we continue to hold as find support, we had a reaction back here, and just it's acted as one heck of a support level, and that's allowed the stock. It had a heck of a run. It needed to work off some of this. Was a big run, and stocks. This is healthy at times to see a stock digest these large gains that they had, a big run up. Now, of course, support is support until unless broken. If it breaks support, I don't have my next support levels down here at 991. So this sucker moves a lot. And again, you have to take that into consideration with your position size. So there's about a 15% or so downside. But I would actually give you a different target here. My first target right now would come in. First would have to be here, $13. Then I could add another line. I just wanted to show you these are intermediate targets, but I think we might be able to swing it all the way back up here to that 1450-ish area, possibly 1640, if this one can start to move and the market holds up. And we need to see the biotech sector hold up. Although this is sort of a niche, smaller cap stock, so it's not going to be as affected as much as the broad markets as would a Gilead or one of these big, mega cap stocks that are top components of, large components of the Nasdaq 100. Tandem, I've sung the praises on this one for a while, shared it, mentioned being long in the trading room. It's not an official trade idea. At one point we may have had it as official trade idea, but this was a level we had a fault. That's what it was. We had a false breakout there, but then I continued to watch it because we put in a divergent low. There were updates made in the trading room and said it needed to take out 343. It did that. I pointed that out at the time. It came in even back tested and has been off to the races since. So since it's cleared 343, this stock has rallied 129%, and at this point it looks good up to my potential third target. It's already cleared that second target. So if you're in it, I can tell you that I plan to book full profits here. It could certainly continue on beyond that, but without a breather, I would expect a reaction there, and I plan to, I have sell limit orders just shy of that potential third target level, the actual resistance at $9. And then another one that I mentioned, biotech, that I liked and still holding up well is Scene. This again was an unofficial trade I did due to the speculative nature, relatively low priced. The levels I was watching at back at that time was right here. This breakout level 439. It took that out and it's been slowly and steadily moving up. It doesn't look like much on a log scale chart, but so far, from where it broke out to the highs, it was up 32%. Pulled back a little today. Actually, what I should have done is had a line right here at this previous reaction low right here, or these lows, and that's where it stopped so far. If it comes back in at this point, I wouldn't chase it, but if you're in it, if you took it from before, look for a pullback possibly to the 440-ish level, and or you can see this uptrend line that I have drawn. As long as the stock remains above this uptrend, sooner or later it'll need a pullback. As long as it does that, it looks good. So there's a potential re-entry, and this one could continue higher. And again, it's a smaller biotech, so those are the ones, if the market takes another big leg down, it's probably your bigger large cap biotechs that are heavy component, heavy weighting of the NASDAQ 100. Those are the ones that are going to come under selling pressure, whereas these little niche biotechs, they can march to their own drum beat sometimes. Okay, guys, I'm going to wrap it up here. This video has gone on long enough, but again, I wanted to just share with you some of the trading ops that I'm seeing. Again, they're all over the place, really no relationship to small biotechs, crude oil, gold, US dollar. Of course, there's the relationship with the dollar, but then the stock market. So, if you guys see anything that stands out or you want a second opinion on anything, shoot me a line in the trading room. I'll be glad to update it, as well as any of these unofficial trade ideas or the official trade ideas. Like I said, that's what I'm there for. I'm in and out of the trading room throughout the day. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.